Okay, so the Invesco Tactical Bond Fund invests across the fixed income universe, so that includes government bonds across countries and regions, both in developed markets and emerging markets. It invests in corporate bonds, high yield corporate bonds, investment grade corporate bonds, both in the financial and the non-financial space. And the fund also takes a little bit of non-sterling currency risk as well, where we see the opportunities. So this is a very flexible bond fund that plays into our active management style. So it is downside aware, but where we see the opportunity, where we see good rewards for the risk we're taking, we can really increase risk when we see fit. So our process starts with a top-down view of the world. So that includes the sort of macroeconomic factors, including what we think about central bank policy, and that would typically inform our duration positioning. So that's our interest rate exposure and our credit exposure. But we also take a bottom-up approach as well, where we utilize our credit analysts from across the team to harness their ideas and look for the best sort of opportunities in individual credit positions as well. But overall, we're looking for a fund that produces good returns and versus the risk that we're taking. Okay, so the principal sources of risks are duration risk, so that's interest rate risk, credit risk, and also to a degree some currency risk. So we'll be looking at the best risk-reward opportunities and ensuring that the portfolio is well diversified, and also that positioning or position sizing is appropriate as well. Okay, so we incorporate ESG through a systematic risk assessment. So that would include research into ESG factors. It would include engagement with corporates, with companies, and also portfolio monitoring of ESG risks as well. So I think having fixed income exposure makes sense in this environment, in this volatile macro environment, and especially since bond yields are a lot more attractive than they were a few years ago. So I think having fixed income exposure is a good portfolio diversifier. And for the tactical bond fund in particular, the flexibility of the fund and our ability to align risk with reward means that this fund can play a role in that. And in particular, our ability to, when we see the opportunities, take risk up, but equally when we feel that valuations are a bit stretched, then we can really sort of dial down the risk in the portfolio as well. So having that flexibility, I think, is absolutely key.